Welcome to part 3 of our deep dive analysis of Visa. In parts 1 and 2, we had a look at Visa's business model. And now that we have a better understanding of the business, let's have a look at the company financials. Now, for me to classify Visa as a great company to invest in, it must pass my 8-step criteria, which is number 1, the business must have consistently increasing revenue. Number 2, it must have consistently increasing net income. Number 3, it must have consistently increasing cash flow from operations. Number 4, gross profit margin must be 40% and above. Number 5, net profit margin must be 25% and above. Number 6, return on equity must be 15% and above. Number 7, it must have conservative debt. And number 8, it must have an economic moat, that durable competitive advantage that protects it from competition. So let's put Visa through the 8-step criteria and let's see how it performs. Starting with revenue. Is revenue increasing consistently? Revenue is increasing consistently. Is net income increasing consistently? Check. Net income is increasing consistently. And do not worry about the dip you see in 2020, because that was due to the global lockdowns. It had nothing to do with the business. Cash flow from operations, is it increasing consistently? Check. Cash flow from operations is increasing consistently. And again, the dip in 2020 was due to the global lockdowns, had nothing to do with the business. Moving on to the profit margins, starting with gross profit margin, which is gross profit divided by revenue. We want it 40% and above. And as we can see, it is consistently above 40%. And actually, its Visa average is 80% gross profit margin, which is fantastic. And when you compare it to its industry average of 57%, Visa is miles away of the competition. Moving on to net profit margin, we can see it is consistently above 25% and averages around 51%, which is fantastic and very, very high compared to the industry average of 17%. So you can see that Visa has got very good and high profit margins. Now, a business with such high profit margins is indicative of a company that is a leader in its field, a company that has a good competitive advantage, which enables the company to set whatever price they want for their goods and services. And these are the type of companies we want to invest in, companies which are a monopoly, or in this case, a duopoly. Therefore, they can set whatever price they want for their goods and services and get away with it. A company like that will never go broke and it will always make money. So far, so good. Moving on to return on equity, which is net income divided by shareholders' equity. As we can see, Visa averages around 34% ROE, which is fantastic compared to the industry average of 6.1, very low. So Visa is very efficient in turning shareholders' money into profits. Moving on to Visa's debt structure. We look at 3 parameters: current ratio, total debt to EBITDA, and debt servicing ratio. Current ratio, which is current assets divided by current liabilities, we want it to be greater than 1. And in this case, it is 1.4 times, which is great. So it means that Visa has got 1.4 times more current assets than liabilities. Total debt to EBITDA, which is total debt of the company divided by the EBITDA, we want it to be less than 3. In this case, it is 1.04 times, which means that Visa can pay off all its debts in 1.04 years, which is excellent. Debt servicing ratio, which is net interest expenses divided by cash from operations, we want it to be less than 30%, and in this case, it is 2.9%, which is very conservative. So Visa has got a very good conservative debt structure, which is excellent because we do not want to invest in companies which is swimming in debt, because companies that have got a very high and unsustainable debt are high-risk companies. And as investors, we do not want to invest in such companies. So far, so good. Moving on to the last criteria, which is economic moat. We ask ourselves the question, does Visa have a sustainable and durable competitive advantage that keeps the competition at bay? The answer is yes. In my opinion, Visa has a wide economic moat. It is almost untouchable. Together with MasterCard, they are impenetrable with regards to the electronic payments markets. So what is the source of this strong moat for Visa? Number one, its market leadership and brand duopoly. Visa is the largest electronic payment services provider, accounting for over half the global card transactions across 200 countries. It is also a household name associated with reliable and safe transfer of money. Now, I know this for a fact because all the cards I have are either Visa or MasterCard. The second source of this strong moat is economies of scale. Visa payments infrastructure is scalable, which enables the company to penetrate any market around the world at lower costs. Due to their extensive network, they can process almost 200 billion transactions per annum, which in turn gives them a cost advantage. And because they have that cost advantage, they can set lower fees and therefore attract even more clients to their network. Lastly, they have a network effect. The more people use Visa, the more it is accepted by businesses worldwide. And businesses are obligated to use Visa network because they will lose business if they don't do so. And the more businesses use the Visa network, the more convenient and attractive to existing and new customers. So this sort of becomes a self-fulfilling prophecy, a snowball effect that keeps growing and growing and growing on its own energy. So, in my opinion, as we have concluded the 8 steps, Visa passes all the steps of a great business, and that is why I crown it as a great business to invest in, and that is why it is a member of the Mntom'nyama playbook. I hope you guys enjoyed this video as we have come to the end of part 3. I will see you in the last part, which is part 4, where amongst other things, we shall compare Visa to its closest competition. Please don't forget to subscribe, like, and share this video with your friends and families. See you in part 4 as we conclude our deep dive analysis of Visa. Goodbye.